Welcome back to Investing Talk podcast.
Great to be here.
We are so excited you're here for another one of our deep dives. This is where we take, a whole stack of the latest reports, analyses, our own research too, and try to pull out the most important insights and maybe some surprising facts just for you.
And today we're looking at a real giant.
We're focusing on FedEx. We're going to explore its recent financial performance, those big strategic moves they're making, and, try to get a sense of what the future might hold.
Our mission really is to cut through all the noise, help you understand where FedEx stands right now, what are its challenges, where are the opportunities.
And crucially, what it all means for you, our listener. So if you find this valuable, please do remember to subscribe, like the show, leave a comment. It really helps.
And if you're feeling particularly supportive today, you could consider buying us a coffee. The link's usually somewhere down below.
It is indeed. Okay, let's get started. FedEx. When we look at the immediate picture, it's financial health, recent performance. What's the first impression? What's that heartbeat telling us?
Well, the numbers paint, I'd say, an interesting picture. It's one of stability, really, in what's a pretty mature market. For Q4 fiscal 2025, their revenue came in at $22.2 billion.
Okay.
Which is, a modest 1% increase year over year. It was $22.1 billion in Q4 fiscal 24.
So not huge top-line growth then.
No, not really. And if you look back over the last, say, 3 to 5 years, revenue growth has been pretty flat overall. And that's not necessarily a sign of trouble for a company this size.
Right, it's more maturity.
Exactly. It signals a mature business that's really focused on keeping things stable through operational efficiencies rather than chasing explosive growth. The full-year revenue for fiscal 2025, by the way, was $87.93 billion.
Okay, so modest on the top line, but then earnings per share, the EPS, that seems like a different story, more dynamic.
It really is. Their Q4 fiscal 25 adjusted EPS was strong, came in at $6.07.
Which beat expectations.
It did. And it was up from $5.94 in the same quarter last year. And here's the thing. They've now managed 2 straight years of earnings growth.
2 consecutive years. And that's despite, let's face it, a pretty challenging global economic backdrop.
Absolutely. And the Q4 diluted EPS was even higher, $6.88.
So how are they doing that? If revenue growth is kind of flat, how are they pulling off this earnings growth? What's the magic there?
Well, that's where you really see the resilience of FedEx. The key is that operating income actually grew faster than revenue.
Ah, okay.
And they've hit a healthy gross profit margin, around 27.2%. It all points to really effective cost controls.
So trimming the fat, but maybe more strategically.
I think that's a good way to put it. It's not just cutting. It feels more like surgical precision in their operations. They're essentially squeezing more profit out of each dollar they earn. It kind of proves that in this mature market, maybe smart growth through efficiency is the new big growth.
Interesting perspective.
And if you look at their overall financial health rating, it's generally considered good. Those profitability metrics are robust. Which brings us to a pretty important point.
Which is?
How are they managing to generate better free cash flow when the environment's tough?
Right. That's key for investors.
It is. And a big part of the answer is capital spending. The money they reinvest back into the business. Infrastructure, planes, tech.
Mm-hmm.
For fiscal 2025, they really pulled back on that. Capital expenditures were down to $4.1 billion.
From what?
From $5.2 billion in fiscal 2024. That's a 22% decrease.
That's significant.
Very. And that reduction directly boosts their ability to generate free cash flow. More cash left over after all the expenses and investments. That's crucial for things like dividends and buybacks.
And what about their debt levels? Logistics is capital intensive.
It is. They maintain what looks like a moderate debt load.
Mm-hmm.
Pretty typical for this sector, given all the infrastructure needed. And their return on equity, the ROE, that shows solid profitability too. It's competitive within the air freight and logistics space.
Okay, so the internal picture is one of resilience, efficiency. How is the market reacting? What's the stock been doing lately?
Well, as of late June 2025, the price was hovering around $228.91. We saw, moderate gains over the past month. There was about a 1% bump in aftermarket trading right after those Q4 earnings came out.
Yeah.
So a positive immediate reaction.
But longer term?
If you zoom out, say over the last 6 months, there's been steady appreciation. The stock is up quite a bit from those lows we saw in late 2024.
Right. The whole sector was under pressure then.
It was. FedEx has actually bounced back over 60% over the past year from those sector-wide pressures. So quite a recovery.
And valuation, like the PE ratio, where does that stand?
Good question. As of late June, The price-to-earnings ratio was trading slightly below the industry average.
So interesting.
Yet figures around 15 times earnings, roughly,
Hmm.
compared to its historical averages. That might suggest to some people that it could be a bit undervalued relative to its peers.
Food for thought there. Okay, shifting gears a little, beyond the numbers, this is where I think it gets really fascinating, the strategic moves. What's FedEx actually doing to navigate this landscape?
Well, they definitely have some core strengths working for them. Obviously, that huge global brand recognition. You see the logo everywhere.
Can't miss it.
And their logistics network is just vast, incredibly extensive. But crucially, they've been really pushing these cost optimization initiatives.
You mentioned efficiency before. Is this part of that?
Absolutely. Take their D-Drive program. That's a big company-wide effort, specifically designed to streamline things, optimize their network, use their assets better.
Then did it work?
Seems so. They hit their $2.2 billion cost reduction target for fiscal 2025.
Wow.
And they're not done. They're already aiming for about another $1 billion in savings for fiscal 2026. This aggressive push for efficiency is really a core part of their strategy right now.
So tightening the belt, becoming leaner, but still a major player.
Oh, definitely. They're still right up there as an industry leader alongside, UPS, DHL, particularly strong in North America and international express shipping.
And the broader trends, e-commerce must still be a factor.
Huge factor. That continued growth keeps driving parcel volumes. Plus, like everyone in the sector, they're constantly investing in technology to improve efficiency. Tracking, sorting, routing, all of it.
But how does a giant like this, with so much history, keep adapting? What's the really big strategic play they're making right now?
Well, that has to be the planned spin-off of FedEx Freight.
Right. That's a massive move.
It's monumental. This isn't just shuffling deck chairs. Feels like FedEx is making a really decisive bet on its future direction.
What's the timeline on that?
The plan they've announced is to spin off the freight segment by June 2026.
And the thinking behind it. Sharper focus.
That seems to be the main goal. Sharpen the focus on the core express and logistics operations. By separating out that capital-heavy freight arm, the idea is they become potentially more agile, maybe unlock shareholder value too, by letting investors value the two pieces separately.
So maybe leaning more into the e-commerce side, less asset-heavy.
It could be seen as a strategic move towards a more, let's say, digitally driven, perhaps somewhat asset-lighter model, focusing on where they see the most profitable growth.
But it's not all smooth sailing in logistics, is it? There are still headwinds.
No, definitely not. The whole sector still faces challenges. Global
Right.
shipping demand is still a bit tepid. Sluggish industrial activity isn't helping.
Which means everyone's cutting costs.
Pretty much. You see cost-cutting initiatives across all the major carriers, UPS included.
Yeah.
And within FedEx itself, looking at volumes, it's kind of a mixed bag.
Oh, so?
Well, their international export package volumes were actually up 8%. That's good news. But on the other hand, their U.S. domestic express freight volumes declined sharply. That's partly linked to losing a big postal service contract earlier this year.
Ah, I remember reading about that. So swings and roundabouts. Any particular bright spots?
Yes, definitely. Healthcare logistics looks like a significant area opportunity for them.
Specialized services.
Exactly. Revenues in that segment are expected to hit around $9 billion by the end of fiscal 2025. So that suggests a strategic pivot towards these higher growth, maybe higher margin specialized areas.
Okay, so a lot happening. Financial resilience, cost cutting, big strategic shifts like the spin-off, navigating sector challenges. What does this all boil down to for you, the listener, maybe looking at FedEx as an investment?
Well, let's think about valuation risks sentiment.
Maybe start with something tangible like dividends. Investors often look at that for stability.
Good point. And FedEx has a very solid track record here. They've paid dividends for 24 consecutive years.
24 years straight. That indicates reliability, doesn't it?
It certainly suggests it. And they just approved another increase, actually. A 5% bump in the annual dividend up to $5.80 per share for fiscal 2026. That was announced June 9th.
And when's the next payout?
The next quarterly cash dividend is $1.45 per share, and it's payable on July 8th, 2025.
Okay, reliable dividends. Now back to that valuation puzzle. You mentioned the PE ratio was a bit below the industry average.
Yes, around 15 times earnings, which might signal potential undervaluation to some.
What about other metrics like price to book?
Well, the PB ratio isn't always the main focus here, but it's typically lower for companies like FedEx precisely because they are so asset heavy. All those planes, trucks, hubs.
Right, the book value of assets is huge compared to the market cap.
Exactly. So the ratio tends to be lower than, say, a tech company. In terms of volatility, its historical beta has been around 1 to 1.3,
Meaning,
meaning it shows moderate volatility. Moves generally in line with the broader market, maybe slightly more volatile, but not excessively so.
and management seems like they've navigated some choppy waters recently.
They have. The executive team gets credit for overseeing those 2 years of earnings growth, despite headwinds, and they're leading through these big strategic shifts. Of course, there was also the sad news of the passing of founder Frederick W. Smith recently, a true industry legend.
Indeed. So what's the general feeling, the market sentiment around FedEx right now?
It's quite nuanced, actually. If you look at analyst ratings, they generally lean towards buy or outperform. Many cite that potential undervaluation we talked about.
But there's caution, too.
There is, which leads to the important question. What are the main risks investors should really be keeping an eye on, especially with this big spin-off happening?
Good question. What are they?
Well, the usual suspects for logistics are always there. Global economic slowdowns, hitting trade volumes, fuel price swings, always a big one.
Labor costs, too, presumably?
Yep. Labor costs, potential regulatory changes, and just general supply chain disruptions, which we've seen can pop up unexpectedly. But layered on top of that now is the execution risk of this freight spinoff.
Meaning, can they pull it off smoothly?
Exactly. It's a complex separation. Can they manage it without disrupting the core business? That's a key risk to watch. Plus, we should remember they lowered their earnings outlook for fiscal 2025 adjusted EPS, projected between $18 and $18.60.
And that weakness in U.S. domestic freight after losing the USPS contract.
That continues to be a drag, yes.
What about chatter online, social media? What are retail investors saying?
It's pretty mixed, honestly. Even after the positive stock bump post-earnings, you see some highlighting the potential undervaluation, that PE ratio.
But others are more skeptical.
Right. Others express concern about that ongoing softness in domestic volumes. They kind of question if just cutting costs is enough for sustainable profit growth long term. Are new revenue streams really needed?
Fair question. And how do they stack up against the big competitors now, like UPS and DHL?
Well, UPS generally still has a larger slice of the U.S. market, but faces many of the same macroeconomic pressures. DHL has that really strong international footprint. FedEx, with its global reach and now this planned spinoff, seems to be trying to carve out its own, perhaps more focused path forward in this competitive field.
Okay, quite a journey we've been on. So let's try to wrap this up. Key takeaways for the listener.
I'd say FedEx comes across as a resilient leader. They're showing stable financials, pretty effective management, especially considering the economic headwinds.
And that consistent dividend history is a definite plus for many.
Absolutely. On the opportunity side, you've got continued e-commerce growth, which is a tailwind, and the potential upside from that strategic spinoff if executed well.
But there are clear risks, too.
For sure. The risks typical of any global logistics and firm, economic sensitivity, operational challenges, plus that added complexity and execution risk of the upcoming spinoff. It's a balancing act.
It really is a fascinating company to watch right now.
And maybe a final thought to leave with you, our listener. Think about how these incredibly complex logistical networks, like the ones FedEx operates, really act as a kind of pulse for the global economy.
Like a leading indicator.
In a way, the big strategic choices they make, like deciding to spin off a major division or heavily investing in something specific like healthcare logistics, these aren't just about their own balance sheets. They often reflect a deep read on where the world's goods are actually flowing now. And maybe more importantly, where they anticipate they'll be flowing next.
So watching FedEx could give clues about broader economic shifts.
Perhaps. How might tracking these large-scale shifts within a company like FedEx influence your own understanding of those bigger economic trends, or even how you gauge the health of the global marketplace? Something to ponder.
That is a powerful thought. A great place to wrap up. Thank you so much for joining us on this exploration of FedEx.
My pleasure.
We really hope you feel more informed and maybe have a better handle on understanding this complex and important company. Thanks for listening, and we'll catch you on the next Investing Talk podcast.